The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful Friday, November 16th. On the cusp of a wonderful day out here, just getting ready for a big weekend and a short week. Of course, we'll be closed a week from today, so we'll have both Thursday and Friday off. It's going to be rather interesting, but not much business. I think the market's open till noon on Friday. Not a lot of reason to get. You normally get a bounce fairly early, maybe 10:30 in the morning, once the first numbers come out for Black Friday. In this case, we're probably going to know even a little bit ahead of time because, of course, Walmart and Target are going to be opening up on Thursday night. I thought I was going to throw up when I walked into a Walmart a couple years back in the middle of September 15th, and they had all the Christmas stuff up and were playing Christmas music. But I don't know. There's nothing you could do to get me to go to a store on Thursday night. If the items were free, I still wouldn't go on that Thursday night. So maybe that's just me. But I feel sorry for those employees that have to work. And somewhere down the line, we need to just get laws saying the stores can open up at 6 o'clock the next morning, and that's it. Today is Guinness World Record Day, where they promote going out and setting a lot of records for their, is it a book or is it a website now? Who knows what? You just know that you have a Guinness World Record. But I don't know. It used to be in a book, and now maybe it's on the website or something. I haven't looked at it in a lot of time. Don't really care how many beans some guy ate or anything else, but I guess it's nice that you could say that you own a world record. It'd be nice to think about it. Anyway, what do we have going on in the market? We've got IPOs, we've got expiration, got a lot of stuff going on here. Let's check and see how it's doing. On the S&P, I'm having a little problem. I had a little problem coming in here. And I think maybe still waiting for my website to come up. Here we go, slow but sure. 2.6 billion shares already. Not too bad, 1357. I've been basically talking about support coming in on the S&P, which I thought was specific at about 1350. We got down to 1343, back up at 1357. So this is where the first level of support's going to be. The volume has been high enough that this is going to get chewed and tested a bit. I do not have any positions except one in my daily newsletter. That one's doing okay. It is a long position in the energy sector. But other than that, we've got a market out here that is probably a little bipolar. It needs a little bit of lithium, maybe one of those new psychotropic drugs to calm it down. We've got a bunch of, what do they call them, nabobs of negativism from Capitol Hill. They should just shut up and come out with something instead of come out and throw fruit every once in a while, try to make everybody feel a little better. It's actually worse. It's kind of like telling somebody you're going to pull a hair out of their head and you just keep talking about it for the next 10 minutes before you do it. If you just snuck up and pull it out, that would be it. But this kind of water torture, just pretty amazing. Anyway, my one position's up about, 6-7%, something like that. So pretty happy on that. I think it's going to be a long-term position. And basically everything else I have is flat. I don't see a lot of reasons to be in this market. You've got a lot of headline risk. Plus, you've got a market that's incredibly short. We've got stocks popping left and right, up and down, depending on their news. And it's awful hard to figure out exactly when and where these news articles are coming out that are actually going after these companies. Apple reversal. Okay. And I'm thinking that 522 is going to be fairly decent support on Apple. We had a question in the den. You can always call me at 877-927-6648. 522 was that last major low. It's going to go over that with volume today. This is the first time to bounce. My thought was before today that we'd see that 522 tested as it has. If it closes back above it, even on higher volume, you've got the opportunity to maybe drift back up to 580. There's a little gap up there. And then maybe that sets up the next ABC down. It'll really depend on whether or not Apple gets going. I wrote my Tech Insider newsletter today a lot about what it takes to get a company like that going. Actually was inspired a bit by the Lincoln movie coming out today. It's I think there's elements in there. You may not draw the parallels, but I did in the Tech Insider newsletter today about getting some of these companies have everything they need to win, but their current leadership is destined to try to steal defeat out of the jaws of victory. But the question is it capitulation low for now? And I think so. We're probably going to start seeing low volume come in about Monday afternoon. You're going to see that Wednesday and Thursday. You normally don't want to be short a quiet and light volume market going into these, whether you're in a bear market or not. What happens with low volume, it becomes very tough for the shorts to push the market down very much. And a lot of times, especially the shorts, are more likely to get out and blink quicker than the longs, even through a weekend and week like next week. And you see kind of a slow melt up. Whether or not we have a decent Black Friday is probably going to set the tone for what we do after that week. So I don't know. To me, it sounds too much like a bet. I don't like having a position either way if it isn't very short. There were some positions. I rarely play intraday positions, but there were a couple of sweet ones out there today when it was pushed down. I was able to buy, some 10, 20 cent puts that ended up doing extremely well. Was out of them a few hours later. And when you can get 5, 10 to 1 back on a day like this, it's always good. I used to be able to do it a lot more. Over the last couple of years, it's been tough. But it's gotten, the last couple of expiration cycles, there have been some good moves out there where you could get, you could pretty much look and see where the stock was going to expire. Amazon was one of those today. It got down to 218 and it popped up to like 227. But you had a very short window of opportunity to buy them under 220s and get them at a discount and sell them when they cross back above 225 and 226. But a lot of these, we'll probably get into the chart of Amazon. We'll get into the chart of Apple a little bit. But there's some options not really that bad these days. But it's been kind of tough over the last few years to actually make any decent money on them. But the last couple of months really turning that around. What else do we have? Ruckus Wireless came out today. A little bit of a disappointment. We've got 1375. Okay. Yeah, that sounds good. We're going to play some Steely Dan going into the weekend here. And I was thinking got our wonderful engineer / producer Steve in there. And I had to beat him about the Head and Shoulders many times to get him to quit paying the bad disco music of the 80s. But I think I've got him fixed. Just a little love tap out there, just to wake him up. But anyway, Ruckus Wireless out there, RKUS, 1375. It came out at the high end of the $15. I didn't look at what it had been doing. Maybe see some other ones out here, but just not a whole lot of reason to get way excited on it. Let's see if there's anything else out here. The news is actually kind of lean, so we'll go right to looking at the Apple chart and see what we see. But last I remember, I was looking at this gap that comes up right around 580. So let me see. Yeah, it's right there. Capping on a gap down, some nice heavy volume. That happened on November 7th. Came down with 28 million shares. We've had kind of a little hammer candle out here. I was looking at that 522 level. We got down to 505.75 today. But Apple's one of those stocks where you're going to get a lot of pushes one way or the other. So, yeah, probably a small consolidation day today. I think, you've got some fairly decent news coming about their sales. The new iPad 4, the latest version of that goes on sale today, too. Could this thing drift back up over the holidays to 580? I think it probably could, especially just all the short interest out there. At that 580, I'd be looking for the next setup for maybe an ABC down. Could it get back up to $600? This thing is loving to overshoot its support and resistance areas. Could it get back up to 600? It could, especially with all the short interest and bearish temperament out here. One really good word from Capitol Hill, and a lot of these shorts would have to run for the covers, run for cover, and through light volume. That from about now on, we're going to see lighter and lighter volume all the way through Christmas. It becomes a little harder to move stocks. It makes it very hard to push them down. We're going to continue probably seeing that. So we might have a little year-end rally. This thing's not going to be anything compared to the move down. But 580, 600, probably a lot of Apple people would be happy with that. And then if that does happen on light volume, that sets up your next leg down. What'd you have? $200 straight down. So let's say half that's $100. Get back up to 600. You set up your next ABC move. That would take you to 400. I think there's a target down there around 427 where Apple could end up going. I'm not predicting that at the moment. We need to see how this thing pulls off the bottom. But so far is going to be tough. Anyway, we got what else do we have going on today? We'll be in the first hour of the Tom O'Brien Show today. Steve Rhodes and I will be hosting. Steve will be doing the first 20 minutes and catch us all up on the end of the day. In the last 40 minutes, we'll be talking about tech stocks and all things surrounding tech. You might remember to give us a call at 877-927-6648. Even during this show, or maybe during that first hour, and ask about maybe how some of these stocks are lining up. Of course, we've been talking about it for 3 weeks, about the 1350 level on the S&P. We had yet another test today. What do we got here going on now? Let me just get the 1355. I didn't see a lot. Like I said, I'm flat. I don't see a lot of reason to be either long or short here. Way too many shorts. And it will take a while for this market to break, even if we are headed down further. The problem is decent news or other kinds of news coming out. And, we got a little Steely Dan as we wander on and off. Anyway, we'll be back in just a minute.
Wealth management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. DirectionShares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the DirectionShares carefully before investing. The prospectus and summary prospectus contain this and other information about DirectionShares. To obtain a prospectus or summary prospectus, please contact DirectionShares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, we're going to look at a few stocks out here that look like they may be close to putting in some kind of low. I'm going to go through these, why we do the show, because it really doesn't matter. In fact, I didn't even put any charts in the newsletter this morning because it just doesn't really matter during expiration. You want to see how these things actually close out at the end of the day. And we'll look at a few of them out here that I've been keeping an eye on. One is Air Lease Corporation, symbol is AL. This one's, doesn't have a lot of money in it, but looks like it trends out fairly nice. It had a huge gap down day, and that was on May 15th. It came down with 1.8 million shares. Been trying to get back into that gap a couple of times on lighter volume, but energy's up, still has maybe a wider trading range out here. But this chart kind of shows and sets up the entire market for stocks that tend to be bullish now. And that is that they came down on heavy volume and are now testing their highs on lighter volume. Align Technologies, ALGN, is the opposite side of that coin. You have some that came down on heavy volume and are now testing the lows on lighter volume. This one, when you see these ones come down on huge volume, most likely the idea is that, okay, it gets retested and then the stock takes off. And the answer is it probably doesn't. They're going to need, you might find some kind of bottom around here in the 25s for a line, but it's going to take some consolidation. I think a lot of these stocks are not going to move or move well until we see maybe the first of the year. So don't get too excited about a lot of these stocks. Allot Communications, ALLT is the symbol on this one. This thing actually broke through the previous lows, but it has on lighter volume. Some of these that have been hitting this range, in the case of Allot, the May 17th low at 21.10. We've got another low out here August 2nd at $20.75, another 1.1 million shares. Real light volume as we go through, broke through that today. You need a close back up of that 2075, 2110 area to have this thing come back in. But this nice little range out here goes back up to the 28s and 29s. We might have some that are nice. As long as you don't have any huge volume down days that are going to send these stocks sideways for a while, not a big deal. Alaska Communications Group. We'll just go through some of these real quickly as I'm seeing, because I haven't had a lot of time to check them yet. And some of them. Angie's List, I want to check in on this one. I hadn't really liked this one since the IPO. It looks like it may be setting up for some kind of low out here at $9. It did do exactly what it was supposed to, which is it took off, had a nice gap up on earnings date. It's now pulling back into that gap up and starting to fill it, especially in these markets that an IPO's held its lows, is fairly good. I've disliked this one to begin with because they were around for like 10 years or 15 years. Before they even IPO'd, they've never made money. Now, some of that can be attributed to trying to grow a company. But just like Facebook, I dislike companies that are actually on the market that have never figured out how they're supposed to make money. The idea is if they get a big wad of cash, that they can turn these companies into money makers. I'd rather see them make money at a lower level and then actually start moving out. But, no, it's not Craig's Sisters. It's I think it's a cult. I think that's what it is. Now, it's where you are able to give reviews of local repair people and how they did at your house. Of course, and Incorporated, another one that I think we talked about this a few days ago. Not a bad-looking setup, and we might see some of these drift back up higher, like I said, after Thanksgiving. I'm pretty sure this is Ann Taylor, isn't it? Oh, let me just verify that it is. The clothing store. Well, yeah, my sister-in-law likes to get her clothes from Ann Taylor and those bunch. But anyway, it is took off on high volume, up at 9.3 million shares on August 17th. It's been pulling back here, made a high up there at $39, coming back into these levels. There's a double gap that exists back here at about $30. I suspect that we can still find some of these retailers, especially with the bad retailer numbers, continue to pull back. But not a bad-looking chart out here. If you continue to see this very, very light volume back into the $30 range, we would want to be taking a look at that. Anyway, please give me a call, 877-927-6648, 877-927-6648, and we'll talk about what you would like to, especially it's quiet, almost end of the day, expiration day. I need a call. It's just like a hug. Give me a hug. Please give me a call.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on NADEX in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade NADEX spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the NADEX exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the NADEX box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with NADEX. NADEX, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with NADEX in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. NADEX is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As we come back, we've got Roger from Seattle on the phone. How you doing today, Roger?
Hey, pretty good, Dave. How about you? I couldn't give you a hug, so I thought I'd give you a call.
Well,
make you feel better.
You know, I've had a loss in the family today. The Twinkie.
Sorry to hear about that.
My brother, the Twinkie,
The Twinkie.
is gone. I feel so incomplete. I just how could they do that to us? I think that they should all be beaten with shovels for taking our Twinkies away from us.
Well, I hope all those guys that went out on strike starved to death.
I hope that, the problem was that it wasn't all of them. It was just the Bakers Union. The Bakers Union are part of the kind of the what faction? The Taliban faction of the unions. I'm going to call them the Taliban side. And what they didn't want to do, they were giving up 18,000 jobs so that they wouldn't have one truck carrying both the bread and the Twinkies at the same time. There was a bunch of just huge, ridiculous crap in their contract. And they wanted to keep all that ridiculous crap, and they didn't want to give it away because then other people might ask for concessions at other companies. So they were more than willing to dump 18,000 people into unemployment right before Christmas to keep that. I think they had to give up a 4%, I think it was 4% or 5% the first year of salary cutback. And then they would have gotten that back in about 2 or 3 years. So it wouldn't have been great for them, but I can imagine that it's going to take them 2 or 3 years to work back what they're going to lose before they get another job.
Well, does that include snowballs, too?
You know, I don't. Do they do snow? Yeah. In fact, I remember if you watched, what's the name of that movie? It was a zombie movie that was out a couple of years ago.
Right.
The guy got to the hostess truck, and it was only, he opened it up, it was full of ding-dongs, not one Twinkie. He got real upset. Woody Harrelson was in it, and I can't remember. They ended up killing one of the Saturday Night Live guys by mistake.
Yeah, Bill Murphy.
Yeah, they killed Bill Murphy. What's the name of that? Oh, what was that? What's the name of that movie? You remember?
Oh, God, what was
Zombieland. You got it. Zombieland,
right.
Yeah. I like that flick. Anyway, we're talking Google here today.
Yeah, why not?
What are you thinking about that?
Anything else.
What are you thinking about that?
I have no idea. That's what I'm looking at. I called you quite a while ago. We were looking at Google at 680. We thought, well, and then it popped up to 700, and I'm glad I didn't bother with it because then it would have, taken my pants down when the earnings came out.
Well, that wouldn't have been good.
No.
Anyway, you got that ABC going down. You're into support. You had those 2 huge volume days down, and that's what it's normally you want to give anything that has that high a volume down some time. I mean weeks, months. And that's probably pretty good. This thing's coming back into it. Did see some news on both tablet shipments for Google and for Amazon today. And they came out about when Amazon popped. And not too bad, actually. I think Google sold about 12 or so million tablets in the last quarter. And even Amazon sold 5 or 6. So, that Android ecosystem is going fairly well. I think probably the reason they've really started to hammering down is they really haven't fixed the issue, and I haven't seen anything about it. We talked about it here on the show, and that was that they make 45 cents on average for each search on the desktop, but they're only making about 25 cents for each search on the tablets and on the mobile devices. And they still really haven't come back with a big answer to that, even though they're doing well with the whole Android thing. They don't make that much money on it, but hopefully they're going to turn that around. I like Google. I like Microsoft. I think Google's the better one of these two right now, just because of the leadership and the CEOs. But we're going to have some kind of turnaround in this economy for them to get some more money for those ads. And, this is probably where support is. The question is, you're probably looking at this thing maybe going from here up to 690, 680, something like that, which isn't a whole lot on a $600 stock.
Yeah.
There's a little gap down there, and there's the bottom of that heavy volume that starts just under $700. And I'm thinking you could probably get a bounce up to that. I've been doing it for 2 days, and I haven't found anything yet. But I suspect that the next really good play in the market's going to be finding very heavily shorted stocks that aren't all horrible. I mean, going down the tubes or anything. And maybe getting a little bump in the light volume after, Black Friday, and seeing these things just, 3-4 days in short covering. And that may be the trade between now and Christmas even. So it may be tough, but looking at very high short interest stocks where you're going to have natural buyers on the way back up.
Well, it looks like there'd be a ton of short covering from that 750 level.
Yeah, I just don't think you're going to. I see what you're saying up there. I think you're going to get. Everybody's so negative now. I suspect they're going to come back in and start hammering this thing right about $700 and $710 if it got up that high. That's where everybody'd be reshorting it again.
Again, yeah.
Yeah. So could you get up to that area into that heavy volume day down? What I dislike is the next day after that first heavy day down had almost the same volume. And that starts at about, 680 or so? And that just means that you're probably going to have people back in there. That may be the end of short covering, and then everybody just hammer it from there. So, I just came off making some really good wood, and I hate to give any back right now. I don't know what your trading was like, but the made some good trades. I had 5 of them, closed 4 of them out for a profit, still have another one. And, I hate to be throwing money back out when I'm unclear. If this volume would have been real low at 1350, I would have been all over moving for a bounce out of this market. But I continue to see the same thing, which is we've had too much volume, which makes me, but not enough to break the lows, which makes me think we may get like a few-day bounce. We're going to come back and probably test that 1343 one more time on the S&P. And there's when we probably, if the volume is real light, well, we got 2.7 million shares already today. So we're going to end up like 3.5, 3.8 maybe by the end of the day. So I'm thinking one more test of this thing. Maybe we get like 2.5 or 2.8 billion shares for the day. And then that would be it. And that may take, into next Friday or something to get this congestion out and see that short bounce that we're looking for. I didn't look for it today. I didn't go long any new stocks or anything. And, the only thing I thought was a play was some of these white lightning option plays today. And until probably next week, I looked through them for a couple hours last night. I didn't see much of anything.
Yeah, it's more like a head fake rally.
Yeah, but I think if you're patient and you wait about a week, maybe in the next Friday or the week after that, we may see that short covering rally done. I think we're through with tax selling. Everybody knows about it. If they were going to sell, they sold. We've got a huge short position out there. So we've got all the makings of a wonderful short covering rally, but those normally don't last 15 days. Those last like 3-4 days. And they're bright, and everybody buys, and shorts are running, everybody buys more, and then it's over. And so, you're going to have to be very fast on fast on the fingers, and don't be greedy, because these things could set up ABCs right back down on light volume. So I don't know. Maybe Monday I'll have a better idea after I look and see all the charts that and how they closed out today. I hate going into this morning because there just are so many option games that a lot of times it's very tough to go back and look at these. Now,
well, it's really hard with this light volume too.
White light volume on Google?
Yeah.
Yeah, like I said, the chart does not look bad. I just want the market with me, and the biggest problem is that, to really get a decent signal, you'd want to close above 670 with less than 3.6 million shares. What have we had last couple of days? Well, yeah, you got one day with 3.1 million shares, but everything looks good as the chart. You just need a market that moves with you, and I think we've got options rollover for Monday and Tuesday. I suspect that maybe we'll have a pump up on Monday and maybe get up to 1362 or something like that. Go back, retest that 1343 on Tuesday, and that's going to probably come in on light volume, and that may be the first opportunity to take a shot at getting in on one of those light volume moves and seeing the move up into Wednesday's close as a short squeeze. But, if you want anything longer than one-day trade, it's probably going to come the week after this Monday. So,
the week after?
Yeah, I think we've got 7 or 8 days where if you wanted to go on a vacation, this would probably be a very good week.
It'd be a really good time.
This would not be bad. But I think you're going to make a bunch of money in about 3 or 4 days in this market on the short squeeze, and then it's going to be a very light volume short squeeze up until maybe Christmas, unless we have some really bad news out of the Mideast or some really bad news out of the fiscal cliff negotiations. But I suspect neither. I think we've probably seen the worst of the effect of the Mideast turmoil on the U.S. stock market. It just doesn't matter as much as it once did. I don't know how long you've listened to me, but there's
a long time. Yeah.
Okay, but then they've gone ahead and built pipelines across the Straits of Hormuz. So there just isn't the idea that Iran can really go down and shut down everything they did like they did before. Almost all that stuff is actually working now. They're building additional terminal facilities and building additional storage facilities. There's a question of whether or not they're even going to move the ships back up there or start moving out of into that terminal now, just so they don't even have to go up anywhere close to Iran. So,
well, how do you figure the fireworks in Gaza Strip? Does that make much of a difference?
They're 1,000 miles away from any oil. Can they all start trouble? Yeah, in Iran, and they're still going up there to get and fill those tankers. But more and more, the rest of the states around them want to have nothing to do with those guys because all they do is screw up their money making. And they can throw bombs all they want and yell and scream. They tolerate them because they keep the price of crude a little higher. But at one point right now, they can't afford to go a couple of months without oil. Their citizens would, storm the Bastille too. So, they want the prices up, but they don't want the crude to quit flowing. So, yeah, and I think they're at the point now where they would rather Iran just kind of fade off into the distance. But, Israel and all that, they're in the Med. It's 1,000 miles away. I kind of feel the same way as those guys that struck. I just would hope that they probably, these guys are out trying to kill kids and children and everybody else they can. And, I just...
and they're trying to cut us off of Twinkies. How's that?
In fact, I'm sure it's an Al-Qaeda plot. I'm sure that they knew the Twinkie would be the downfall of the U.S. thing. Yes, anyway, well, thank you. You have another stock you want to look at?
Well, I don't know. I guess we could look at Priceline. I don't know what to think about that one either. It's,
Priceline, it's in a trading range lower. The biggest problem with Priceline is the bulk of their earnings are for hotel reservations in Europe. And the question is, as the economy continues to move down in Europe and into recession, whether or not this company is going to have a good next year, as long as it was at least stable in Germany, there was good chance. This thing's down there at about the 553 level, 554 level. What I dislike is that the volume didn't come in light enough. Down at that, the first low was August 9th. Came in with 2.4 million shares at 553. You got into that again, but didn't test the low, and came in on just 400,000 shares lighter. I suspect this thing is going to be a buy again down at that 553 level.
You think it'll break the 200-day moving average, and it's sitting right on it?
I never look at moving averages. Okay. If you've ever heard my dissertation on that, they are always 90 degrees out of phase with the major signal. You could not watch your television and use a moving average for all the stuff that goes on. Moving averages always 90 degrees out of phase with the underlying signal, so I don't use them or believe in them.
Or believe in them either.
9-day one that Basil uses actually is fairly good. It's close to a ballistic curve on it, but other than that, I really don't look at many of them. Thanks for the call. We'll be wrapping up this show, and when we come back. Thanks again.
Have a good Thanksgiving. And
are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Okay, since we were talking a little bit about Apple, it's all about the Apple supply chain. I think it gave us the clues that Apple was going to break and break hard. I actually did a special report. I'm going to have to dig that back up and see a lot of these stocks, but I think I put it out on a Tuesday. We talked about it on the Tech Insider Hour on Tom's show on Friday, and within the next week, the rest of these supply line stocks for Apple started to really fall off. It's been 3-4 weeks, I guess, now, but pretty much predicted the plunge in a lot of these stocks, just in the fact that these really tested the highs on lighter volume. One that hadn't is Skyworks Solutions. I don't know if somebody on one of the TV channels is pumping this, but I get a lot of phone calls and email about it. This is finally one that is probably getting close to this lineup. You had a nice little bounce up on the 20th of January. and that was on 16 million shares. We came down with heavy volume at 17 million shares. This thing's been going sideways. All the energy's kind of out of it. If you wanted a little play on this thing, like I said, we need the market to start bouncing up. Somebody just posted in the den about the Zombieland clip. I like that, especially the part with Bill Murray. I thought that was hysterical. Anyway, this is back into that gap. It's back in there with lighter volume. It's already pierced it once. We've come back now with even lighter volume. These are the kind of setups we want to look at. I think the problem is potentially getting into these things a little bit too soon. I think, especially with these high volume down days, you're going to see these things go a little bit sideways for a while. Jumping on these things quickly would be a problem, even if Apple is doing wonderfully out here. I wanted to check with the volume here just a little bit and see our, oh crap. Can I say that on the radio? That's not one of my bad 7 words. I won't get spanked again. Okay, I'm trying to wait. They've got an internet problem in here today. I'm not exactly sure what it is, but I'm having issues. Maybe we'll get another chance out here and get this wound up. Well, I'm drawing a blank. I got absolutely nothing. So we'll take a look at that. But, we got, what do we have, 2.8 billion shares last time I checked. Probably going to be in that 3.3 billion range. Even then, things like Apple, all those shorts, you've got a short week. You start seeing probably, I would say noon, 2 o'clock on Monday. We're going to start seeing shorts start probably pulling off their short positions. You're going to start seeing a little bit of a short squeeze. And that may be minor into Wednesday. Friday, you come back, you're going to have a news-driven day. You're going to have about 1.5 hours of sheer excitement, and the rest is going to be boredom. That Monday coming back after, we'll have a lot better picture of what Black Friday actually brought in the weekend, and then that's probably going to set the tone for the market. But I don't expect we're going to have a lot of people putting money in to the market until they come back that Monday after. Probably still some opportunities out there, but they're going to be short and sweet, and you're going to have your hand on the mouse, hand on the trigger, finger on the trigger, your hand on the mouse. Finger on the trigger sounds better. Sounds more rough. Anyway, you all have a great and safe weekend. Remember, you're going to catch me in the first hour of the Tom O'Brien Show tonight instead of the second hour. We're going to be talking about technology, have a lot of neat stuff. And we'll be doing it with Steve Rhodes, so we'll be able to mix it up a little bit. Anyway, see you then, and if not, see you Monday. You all have a great and safe weekend.